Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of company filings to make sense of what is really going on. Get ready because today we're unraveling a rather interesting move by Invesco Ltd. Some big share buybacks are on the table. And if you like getting straight to the heart of these corporate stories, make sure you are subscribed. We also have a Discord community linked in the description below where you can chat with other finance enthusiasts. So what is the big news, Invesco? A well-known name in the investment world is buying back a significant chunk of its own preferred shares from a major investor called Massachusetts Mutual Life Insurance Company, or MassMutual for short. This isn't just a small tweak, it is a $500 million deal with a little extra sweetener. Let's look at the details of this preferred share repurchase agreement. Essentially, Invesco is repurchasing its own series of preference shares from MassMutual. Now, these are not your everyday common stocks. These are preferred shares, which are a bit like a hybrid between stocks and bonds. They usually pay a fixed dividend and have a liquidation preference, meaning if the company goes under, preferred shareholders get paid back before common shareholders. Invesco is buying these back at a premium, meaning they are paying more than the original value. Specifically, they're paying 18% more than the liquidation preference per S-share. That is a pretty significant markup, showing Invesco's desire to get these shares back from MassMutual. Why is this happening? Well, MassMutual is a pretty big deal for Invesco. They hold about 18.3% of Invesco's common stock, which is a substantial stake. Even after this buyback, MassMutual will still be holding a massive $2.5 billion worth of these preferred shares. So this isn't about Invesco cutting ties with a small investor, but rather a strategic move involving one of its major stakeholders. Now, when you are talking about preferred shares, dividends are a key part of the story, because these dividends are paid in arrears, meaning they're paid after they're due. There is a specific clause about the dividend for the fourth quarter of 2025. Invesco and MassMutual agreed to prorate the dividend. This means MassMutual will get a portion of the dividend from the 1st of December 2025 up to the closing date of the repurchase. This prorated dividend will then be part of the dividend payment scheduled for the 2nd of March, 2026. It is a detail that ensures fairness in the transition. Digging into the core of the deal, Section 1.1 lays out the repurchase of preferred shares. At the closing, MassMutual will sell to Invesco, and Invesco will buy back 500,000 preferred shares. The price per share, a cool $1,180. This means the total price, the aggregate cash purchase price, will be $590 million. Wait a minute, the initial report said $500 million, but the agreement outlines a purchase of 500,000 shares at $1,180 each, which calculates to $590 million. This is an interesting discrepancy. Is it a typo in the summary, or is there a nuance not immediately apparent? This is exactly why we dive deep. This $90 million difference is significant and worth keeping an eye on. What is also interesting is Section 1.2, possible future repurchases. Invesco and MassMutual are agreeing to talk about more buybacks in the future. This suggests a willingness on both sides to continue this kind of financial maneuvering if it makes sense for both of them. However, it is not a guaranteed thing. Neither party is obligated to agree to any more repurchases, so these future talks are pure speculation at this point. Now let's talk about how companies handle news like this. Section 4.2, public announcements, is pretty standard. Generally, neither Invesco nor MassMutual can just go out and make a big public statement about this deal without the others okay. They need to coordinate on the timing, form, and content. This is to prevent any one-sided PR that could potentially impact the market or the other party. There are some exceptions, of course, like if they are legally required to make a filing or disclose information. They are supposed to try and coordinate these public statements though. Let's switch gears and look at the promises each company is making. MassMutual in Section 2.1 represents and warrants that it owns the sale preferred shares outright. This means they are the record holder and beneficial owner. And crucially, these shares are free and clear of any mortgages, pledges, or other liens, except for standard restrictions under securities laws. This is important because Invesco needs to be sure it is acquiring clean title to these shares. Both sides also have to confirm they have the legal authority to enter into this agreement. MassMutual under Section 2.2 states it is duly organized and has the power and authority to execute this deal, with authorization from its board of directors. Similarly, Invesco in Section 3.1 confirms its own authority as an exempted company duly organized under the laws of Bermuda, also with board approval. These sections are about ensuring the deal is legally sound from the outset. Like any contract, there are clauses about ending the agreement. Section 7.1 spells out the termination conditions. This agreement will automatically end if the closing doesn't happen by the 31st of December 2025. If that happens, the agreement becomes void, and neither party is held liable, unless there was a knowing and material breach of the agreement or fraud. So, there is a clear deadline for this deal to go through. Finally, Section 7.4 entire agreement is a legal boilerplate but important. It essentially says that this document, along with any other referred documents, represents the complete and final understanding between Invesco and MassMutual regarding this repurchase. Any prior discussions or agreements are superseded. This prevents future disputes where one party might claim an earlier conversation had some legal bearing on the current deal. So, what is the story here? Invesco is voluntarily buying back its preferred shares from a major investor, MassMutual. At a premium, the stated value is $500 million, but the agreement details imply a $590 million transaction. This could be a strategic move to optimize its capital structure, perhaps because Invesco believes its own stock is undervalued, or that these preferred shares are too expensive to keep paying dividends on. MassMutual, on the other hand, is divesting a portion of its holdings, likely for its own strategic portfolio management. The potential for future repurchases suggests a continued relationship between the two companies. The key highlight for us is that $90 million difference between the reported $500 million repurchase and the agreement's implied $590 million. This kind of detail can signal anything from a simple scrivener's error to a more complex pricing adjustment or fee structure not fully disclosed in the initial announcement. Without further clarification, it's a point of intrigue. Invesco continues to be a major player in the asset management space. This buyback, while significant in dollar terms, is unlikely to drastically alter its operational strategy or market position. The company's move signifies a proactive approach to managing its liabilities and capital. The risk here is minimal unless the discrepancy in the purchase price indicates some underlying issue not being fully communicated. The opportunity lies in Invesco potentially improving its financial efficiency by reducing dividend outflow on these preferred shares. Overall, the direction for Invesco seems to be focused on efficient capital management. Its strength lies in its established market presence and diverse product offerings. A potential weakness could be its reliance on market performance for its asset growth, which is inherent in the industry. This particular filing shows a calculated financial maneuver, perhaps aimed at financial engineering rather than a fundamental shift in business strategy. Alright, that is our breakdown of Invesco's latest filing. What is your take on these numbers and what they signal for the company's future, especially that price discrepancy? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.